Hello and good day. So, the tipping point in investing. So, you all know that, or to help you know if you don't already know, the general idea to investing is to eventually have so much passive income, so much investments making you money that you don't have to work. That whatever level of lifestyle you can live or want to live, you have enough financial freedom based on your income from assets that don't require you to work to make an income that you can live the lifestyle you desire, whether which has multiple different levels, but whatever it may be, the general idea or basic idea of investing is to buy assets that will produce you income, and eventually that will grow large enough to produce you all the income that you need to sustain yourself and eventually sustain your level of desire of life, like whatever luxuries or joy, or whether it be vacations, giving, cars, better house, whatever it may be, or a combination usually, is the for those who do who plan ahead and do really well with investing, but at the very least to cover their basic needs in retirement. For usually, though, if you invest and you learn about investing, you can, at the very least, you can usually do better than base demand for your uh, living cost. However, to give you an idea, the say you had $1 million put away towards your investments. Now, of course, most of this probably grew over the course of several years to decades, earning, say, on a mutual fund, making about 12% average a year. You'd be making $120,000 of growth, from in the 1 year of having $1 million invested. Now, the $120,000 income is probably enough for most people to live on. The Even at a lesser value of $500,000, that's still 60,000, and you can even go so far as probably live a little bit below that to make sure it doesn't, to be in preparation of a particularly slow year, and the average being 12%. So the tipping point that I'm discussing here is when your assets, your investments, make you more than what you make you. Your money works and produces more than you do. Meaning, say you have a $90,000 job and $1 million put away, making you $100,000, $120,000 a year in investments. You're now making more through investing, or passively through investing, than you are from your own job, your own business. Now, that is when you can get into at the very least, at that point, you can continue to live at the same lifestyle you are living at, and higher, because obviously you're putting away income to save and increase your investments and therefore increase your income. So you could probably live at an income even higher or equal to what you're living at without any problems, and then go and quit or retire from your position. Or if you're can at the very least find something that you'd rather do than your current position, if you haven't already started your own business or worked your own self-employment idea. And the idea of the tipping point is a comforting and very mathematically, at that point, if you're on a mountain, instead of going up, you're now going down the slope of success. you are now able to put and grow much, much faster, much, much easier with much less work. Obviously, easier, less work. But the comfort, the security, and the idea of the longer I wait, the better, I can enjoy myself. The more I can enjoy myself now, the security you have. It is a mathematical, is interesting mathematical point to figure out when and eventually achieve when you're making more in your investments than you are in your job. So I just thought to put that out there and hope it helps you guys to be motivated into investing, and it helps you guys to, if you're a math person like me, it is a very interesting to do various equations to figure out where and when that kind of thing would occur, and the mathematical effect that kind of compounding interest has. And if you have any questions, comments, feel free to leave them down below. And if you have any if you would like to hear more content like this, feel free to subscribe, and have a good day.